Making America smart again. It's the Krieger Files with Dave Krieger.
Fred Dashevsky joins us, and I'll tell you what, the markets are volatile. Even Brady called this morning to warn us that you better start stocking up on silver and gold. And I said, yep, that's one of the reasons we're bringing Fred on, because Fred is a supplier of U.S. coins, uscoincapital.com. And that's capital with an OL, like Washington, D.C., uscoincapital.com. 1-800-878-2646 is the number to call. But wait, there's more. Fred joins us here live in the flesh. I want to wish Todd Waite, our board op, a happy birthday today.
Hey, happy birthday.
Happy birthday, Todd. We appreciate that and all the dedicated service you're doing. God bless you, and many more years to come running Global Star Radio Network. Fred, silver just did some incredible things like gold, and we've been telling people because Russia just came out with the new digital ruble.
Yes.
And I'm kind of like, okay, where are we going with this?
So more and more opportunities seem to be presenting themselves to utilize something outside the U.S. dollar. Of course, this is definitely perpetrating part of the problem. But, you know, I've been following the dollar's index pretty carefully. It actually has barely moved downward in this past couple of months with this strong upward tick in both metals. So usually it's a reflection of a weaker dollar. But even though technically the dollar has been getting softer and more, again, countries moving away from it and using other currencies, they are still seeing some strength in the U.S. dollar worldwide. Meanwhile, this massive accumulation of gold and silver have continued, but they have these, they call it nominal, and that would be correct, that we are at the nominal highs for silver and gold. It seems that uncertainty is now the new normal. And I think that's the rationale for what's driving this movement of capital, which has been really extensive. So as we look at gold now, it is now the second largest asset held around the world, gold, outside of the U.S. dollar, which is still number one, as the number one asset held across the world. The number two asset has now become gold on this last accumulation.
So if, you know, because people are looking at the economy, we got a government shutdown, which obviously, I mean, everybody's been talking about it. The finger pointing goes on in D.C., and they're all saying, you know, we're not funding health care for illegals. And, of course, everybody's pointing fingers at both sides, and the public has been misled as far as where we're going with all of this stuff. And people are being furloughed, 34,000. The IRS just got their slips. When you get all this stuff going on here, and then you got all these air traffic controllers that have been told they're going to work.
Yeah, that's what worries me. The IRS, I couldn't care less if they don't have a lot of employees. You know, if they fall behind, well, I'm still waiting for a tax return. Maybe I would like them to be there. But other than that, it's the air traffic controllers that concerns me more than that anything else. You know, government shutdowns can get really tricky, especially as they get prolonged. You know, when they last a couple of days, you don't feel much impact. But the longer they stretch out, the more problematic they become. And again, you and I have had these conversations. I see this as more of a political event that will come and go. Because if people don't recognize the reality, when they talk about these things, we're not talking about determining future spending of the U.S. government. We're talking about paying bills that we already have to pay. But we've run out of money because the Congress was trying to constrain how much deficit spending was occurring by setting themselves an arbitrary limit, saying that, look, we cannot exceed this point. If we do, we're in trouble. So here's what we're going to do. If we get to this point in debt, we're going to either have to shut down the government or make some significant cuts to the expenditure side of the equation. And this is where the political problems kicks in, because now you've got to decide who loses. Is it going to be health care? Is it going to be welfare recipients? Is it going to be government-funded employees? Who's going to take the hit if the government runs out of money? So I believe they will fold like the proverbial cheap tent, and they will go ahead and say, well, yeah, we set this limit and said we're never going to spend more than this, but now we're there. And the reality is we're going to have to raise the debt limit. And in other words, allow Congress to go farther into debt than it currently is. So watch out for the $37.5 trillion number. It's going to start exploding as Congress raises the limit, and we go back to business as usual, printing and printing and spending and spending.
But the thing is it's all fiat currency.
It is. And that's
now, so, I mean, how am I supposed to do this here? You can't just make up your own dollar bill and write a 37T on it and go, here, I just paid my share of the debt.
Well, let me tell you how bad it's getting, okay? The people that are lining up to start suggesting that there's such a flaw in the dollar, you've got guys like Ray Dalio, okay? He runs the second or third largest hedge fund in the world, Bridgewater.
Right.
He is now saying flat out, everybody should have 15% of their net assets in gold. This is incredible coming from a hedge fund. Jeffrey Gunlock, who's probably the smartest bond trader I've ever seen, he is calling for a 25% allocation of one's assets in physical gold and silver. I mean, these are incredible things coming out of these people's mouths. Even Goldman Sachs, who has been the biggest poo-pooer of gold in all the years I've been in the business, right? They have struggled to prevent gold from going up. They've always tried to discount it. They've talked about it being an unreasonable asset. It doesn't produce any income.
No, and I was just like Goldman, man. They were the ones that were sitting there inventing all these second mortgage loans so they could forgive them and write off their losses against the DOJ penalty. I'm just looking at this garbage and going, man, it just gets worse by the minute. The only saving grace, folks, is if they're telling you this. I mean, Brady was just on the call before we went to break, and he was saying that, you better start getting gold and silver because, and a lot of my callers I was talking to this morning, one of them said, if history repeats itself, if we get ourselves into another major war, will they confiscate gold like Roosevelt did?
Well, I think that to be a little more unlikely in the current world, only because the confiscation that occurred in the 1930s was based upon gold-backed U.S. dollars. So we didn't have the ability to simply raise the debt limit back in the 1930s. There actually had to be an increase in the supply of gold. Since that couldn't be accomplished and the gap between the amount of gold held and the amount of money being printed was getting wider and wider, there was a general recall of gold in order to resupply the Treasury with enough additional gold coming from the public to then allow them to print more money. Since we don't have a requirement that there is an additional amount of gold now absorbed somehow before the Treasury prints more of these fiat dollars, it seems less likely that there would be a confiscation of gold. The only way I see that is if they really are trying to make some sort of subverted event that would allow them to strip the wealth of the general public by denying your constitutional right to own gold and silver. If they try to do it from that point of view, in other words, prevent you from hedging your bet, saying to you that unlike what these people are telling you, that you should have a position in gold and silver, we're not going to allow you to do that. We're going to force you to be stuck within the little maze of having to use paper dollars. That's going to be a fundamental problem. But I think what we're going to see is this perpetual weaker U.S. dollar around the world, as again, if there's any opportunity to use something outside U.S. dollars, people are looking to do that. Yeah. That was not the case even 10 or 20 years ago. People accepted the notion the dollar was the place to be. But no one wants to be in the dollar right now. They're only doing it by default.
But see, and it's just going to get worse because they keep spending, and the dollar is worth less the more they print of it, right?
And yes, and here's the other thing that's happening. So we were talking about previously how central banks have been accumulating gold. This has been increasing all year. China is on a tear. They're adding more gold and more gold every month to their position. But now the institutional investors are beginning to follow the trend of the central banks. So where central banks were shifting from looking at other currencies and couldn't find one they liked, so by default they started buying gold, the institutional markets are now doing exactly the same thing. So there is this enormous worldwide shift going on right now of money moving away from U.S. treasuries as an option, and instead it's going into gold. And this is why this accumulation is going to continue for quite some time. I do not see this as a short-term spike. Although, let me say this, if I'm not the millionth person to say it, there will be a correction. There will be a correction. We have seen a huge, like 45% increase in gold in 8-9 months. There has to be a bit of a pullback. And by that, I mean maybe a couple of $100.
So, I mean, the markets, though, they react according to what happens in Washington, obviously. And this government shutdown really hasn't fazed the markets much because I think all of the traders on Wall Street actually see what's going on here and they know it's political in nature. And it doesn't seem to have affected the market much. However, you brought up the idea about the Treasury bond, and I was looking at this with Japan's potential new prime minister being a woman. All of a sudden, their markets shot up. And the rumor has it, and I don't know if there's any truth to it or not, about all of the fact that all these countries are now selling back their treasury bonds. What do we know?
Well, I haven't seen an awful lot of indications of a lot of selling, but again, I have seen this shift. So where they previously would have accumulated a large amount of these treasuries, again, pretty much by default because it was the safest haven, it is losing that psychological status. And I think the safe haven now is recognized as what it has been for thousands of years, and that's physical gold and silver. Because people are realizing that, look, we can inflate the value of money, and governments will do that. And every government around the world is inflating its currency. But you can't simply expand the supply of gold this rapidly without a new mining operation or somebody finding some new supply. And those are becoming less and less likely, or very expensive if they do come around, to the point where it just doesn't seem like a reasonable expectation that we're going to get a monster increase in the supply of gold and silver suddenly to meet this new demand. But if people are moving away from treasuries, because for the first time in decades they've decided that is not anymore a safe haven, well, then what's left? I mean, years ago, we could have talked about this and we would have said, well, okay, emerging markets look more attractive because the dollar doesn't look great. Or, you know, China's economy is starting to come around. Or Japan is doing something interesting. Europe, there was always some place to look. You take all those options off the table because they're all inflating their currencies. And the investor market looks around and says, well, what do we do? Guess we buy gold because it's been around for thousands and thousands of years and always has sustained its purchasing power. So I believe this monstrous shift from the institutional world to follow what central banks have already been doing the past few years and ignoring the treasuries and moving into gold is very interesting. And yet, I've been watching the bond sales and the 2-year notes. They're still doing $68, $69 billion every week, and they're finding buyers. So there is still some interest in owning U.S. treasuries. But I think the concept of that, having been the safe haven for all these years, is fading. And that, to me, is very interesting.
So I got 3 points I want to cover while we have you on, and then we'll talk about what you're doing over there at U.S. Coin Capital. BRICS, is it still a threat, or is it just kind of weakened?
No, it's still a major threat. You know, because, again, you're getting an organized process to create something that would be a legitimate alternative to the dollar. This has previously been the problem. I mean, a few countries have come up and said, well, we want to be the alternative to the dollar, but nobody took them seriously. You know, you're not going to get that coming out of Brazil or Argentina, you know, when they have 1,100% annual inflation and they can't pay the interest on bond payments that they've been taking from the investment bankers in New York for decades. They keep refinancing. So they're kind of off the table. I think the problem is going to be moving forward that there has to be a serious alternative. And this organization of BRICS, to me, is significant enough. It may not overtake the dollar, but again, it creates an alternative. And even if it's a small percentage of what used to go into the dollar, any weakness in that attractiveness to U.S. dollars makes it harder for us to perpetually sell a growing demand for debt that we have to support the expenditures of a U.S. government that is just blowing through money by the trillions now. I mean, it's just getting absurd. But it's going to be very troubling for the U.S. if we can't consistently find buyers for U.S. debt.
But they seem to go to the outside of the United States to do this because it looks like the inside of the United States doesn't trust them as far as they can throw them.
And do you blame them? You know?
No, I mean, that's one of the reasons why. I just wonder, even Brady mentioned this, you know, why are people still in the markets? Why aren't they doing what everybody is suggesting? I mean, if Goldman is telling people to portfolio this amount of gold and silver, I mean, we haven't even talked about what silver did, too. Silver went crazy over the past week, and it's still hovering above 50. And I was looking at mine going, gee, I wonder if I should cash it in yet. Where do you see silver going?
Well, I think, again, the same process is happening with silver that's happening with gold, with this monstrous shift of capital worldwide, not just here in the U.S., but around the world, to move into the physical metals as a asset allocation process. In other words, everybody is coming to the recognition of things we've been saying for decades, which is people should diversify. I've never believed that you should have 100% of your money in gold and silver, but I've always believed, that you need a percentage of your wealth that's not tied to paper money. And it should be in gold and silver because of the track record and the limited supply, especially if you're owning it in the form of old silver dimes and quarters and halves, which since 1964 have not been made. So we can never produce more of them. We have a fixed supply against a growing supply of paper money. So I think the trend for silver is very positive going forward, and it's going to continually get more expensive against a perpetually weaker dollar. Again, watch for a little volatility. If we see a few dollars sell off in the price of silver in the next couple of weeks, if the government shutdown ends and people are rallying and saying, oh, it's great, we finally resolved the problem, we've allowed
raised the debt ceiling.
We're going to just spend more money. Don't worry, it's no problem. We'll print
There's
more.
something to see here.
Crazy. Silver's going to go a lot higher.
Yeah, buildings on fire, and Leslie Nielsen standing out there saying there's nothing to see.
Nothing to see here.
Yeah, you're gonna love it. All right. So the other thing is Trump proposing that Fannie and Freddie get into the house building promotion market. I don't see, that his idea first was to privatize Fannie and Freddie, and I'm like, look, they're in conservatorship. These people are reckless. As far as I'm concerned, most people don't even know that their mortgage loan is probably parked somewhere in a Fannie or Freddie trust. They have zero idea who's guaranteeing what. And I finally got a mortgage loan officer to tell me that anything having to do with VA, USDA, and FHA is all going to Ginnie Mae.
Okay.
I mean, they finally leveled with me and told me, no, we can tell you for certainty that if you go out and get this loan, it's going to be parked in a Ginnie Mae REMIC trust somewhere, and it's backed by we the people. They're guaranteed. I mean, I've seen the actual portfolio sheets on all of these trusts from Fannie, Freddie, Ginnie. I've seen every single one of them. The United States government guarantees that the investors are going to be paid every month, whether you make a payment or not. And the directive is that the mortgage lender or servicer is supposed to get together with the borrower and try and fix things and get them back on the paying track rather than default them and take all that toxic debt, which the FHFA takes, and they sell it to third-party junk debt pools who couldn't prove derecognition of a loan if it bit them in the keister. So, I'm wondering, is this a smart move, doing anything with Fannie and Freddie at this point, knowing what you know about the economy?
This reminds me of 2008. You're right. We had the same kind of conversation. So was it a good idea at that point to let the default of mortgages rest on a government agency like Fannie or Freddie or Ginnie Mae to absorb all of these obligations from the banks that should be holding them directly? And if we make that shift, what are we really doing? We're creating a false market. We're creating an unsustainable market environment. And again, I hate to say it, but you and I know this. These guys have a horrible track record. They don't have a good track record of being able to maintain the obligations properly. They over-absorb things. They make loans to people that should never have been able to get them in the first place. And somewhere or another, they're going to recreate another bubble in the market by absorbing debt. If they allow this to operate properly, you should walk into your bank, you should take out a mortgage directly from the loaner, and he should hold that mortgage to fruition. He should not be able to pawn that off to a third-party government agency that will absorb it with all the risk then shifting to the government agencies, which we all know when they fall apart and default, we end up paying the bill. That's right. As we are still paying the bills from 2008, in case anybody's forgotten, we are at the third quarter of 2025. We are still paying off the debts we absorbed from the monstrous garbage that we accumulated back in 2008. If we go through this again, it could absolutely destroy the real estate market. So I don't think they want to see that happening. I think they're trying to provide stability is, I guess, their concept. But I don't like the idea of subbing out the liability of mortgages to a third party, especially government agencies. I think we need to go back to more direct loaning and ownership. You walk into the bank, you take out the mortgage, you're responsible for it. Your bank is at risk if you default. And that's where it stops. One bank is at risk. We're not spreading the risk amongst the government agent that will continue to just absorb because they have no problem in writing the checks. They have an unlimited resource. They can print any amount of money. I think this is just, pardon me, a bunch of bullshit.
Yeah, well, and you said it. And the thing is yes, we are on the radio, folks, but you heard it first because this gentleman. Well, you know what? And I understand your point, and it is exactly what you said. And the problem is because see, the days of portfolio lending are over. I wish they would do it. And if you can find a bank that will not sell your paper, I mean, I did this when I bought my first property in Florida back in 2012. I had an attorney in Florida. I was on the phone with him. He says, look, if you're going to move here, this is the time to do it. And because you're going to get a house, I mean, a $369,000 house for $125,000. I mean, come on. And they ate $155,000 of it, the builder did. Brand new build job. And the thing is that they couldn't sell these things back then. And there were 10.2 million homes that got foreclosed on. And so anybody, to me, the best thing as far as, real estate is how much of it can you own and accumulate? How much of it can be productive other than just sitting there with a house with four walls and a roof. And you're sitting there saying, okay, my goal is to make this thing free and clear, which some of us are in that position. And then how much of this excess can we put into gold and silver? Because, see, Florida, for example, like other states, will allow you to pay your tax bills if they don't eliminate property tax or any of this other stuff. They'll allow you to pay the state an asset value in gold and silver. So
that's beautiful.
How many other states will allow you to do that? And should you move to a state like that, if you believe that the market is going to collapse at some point, the dollar is going to get so weak. I mean, where do you see this entire picture? I think real estate is a good investment right now. I don't know about the rental market. I see too many foreclosures on a daily basis coming in, and Adam Data, man, the Realty Track gets all of its info from there. The number of defaults right now and people affected by the foreclosure market is somewhere around 10.3 million. And if you look at the numbers from way back when, 10.2 million homes got taken in the 2008 to 2016 cycle. So I got to ask, what's your prospect here when it comes to real estate versus gold and silver, or should we be holding both and just, staying put with it?
Sure. Well, I've always been a fan of real estate for the same fundamental reason I like gold and silver, because it's a physical asset, especially if people own it outright. Now, if you have a mortgage, again, that changes it slightly. But think about how smart this would have been if January 1st this year, you stripped equity out of a home and borrowed it, or whatever the interest payments would have been. Let's call it, 5%, 6%, 7%. You borrowed that money out of the equity of your home and you bought gold. Now gold is up 50%. You can sell it, pay back that loan, and still have netted some 35% profit. It would have been a brilliant idea to do that. And states that would allow you to use gold and silver to make tax payments, every state should do this. Because, again, if people had bought that gold at the first of this year, they would be able to pay off their taxes, still have the principal that they put in as their initial investment.
They'd be able to pay off their home. You never know. Yep, I appreciate you, Fred Dashevsky, more than you know. USCoinCapital.com. We will see you tomorrow on the Krieger Files. Stay safe. God bless you, and God bless the United States of America.